Now, you've worked hard your entire life and you're looking forward to finally retiring. But have you done any preparation, including determining when the best time is for you to file Social Security? We're going to give you 3 Social Security strategies that can help you have more money for retirement. But first, we're going to go after the break with J.O. talking about the August 15th deadline and what that means for you with health insurance, also the American Rescue Plan. So after him, we're going to talk 3 Social Security strategies. So give us a call, folks, 888-988-JOSH, 888-988-JOSH. If you want the free Social Security Maximizer tool, tip number 1 on Social Security, create your account. It's a free account that provides you personalized tools. And many of you have not gone to SSA.gov. Maybe it's due to privacy concerns. Hey, it's the government. They know your information already. And if you don't log in, somebody else could log in with your data. So that's tip number 1. Tip number 2, verify your earnings are accurate. And tip number 3, estimate as best you can your retirement income streams. And forget about estimate, plan. We will give you a retirement income plan. When you call us at 888-988-JOSH, we can help you map out your retirement income roadmap. Okay, we're going to the phone lines, and we have John with a Medicare problem. Go ahead, John.
Good morning, Josh. I was a public service employee, and therefore I didn't have to pay into Social Security, but I did work part-time jobs and things like that. My Social Security statements informed me that I had 40 credits to be able to collect my Medicare. Well, I'm just short a month of my 65th birthday. I went to apply, and now they tell me I have 38. I've been making multiple calls, and nobody gets back to me, and I just, and it puts me in a situation where I could go back to work and earn 1 credit this quarter and then next quarter, but that puts me in a spot where I don't have my Medicare when I need it.
Well, you definitely want to be eligible, so my advice would be get the work credits in. You can also email me and I'll pass your question along to some of our resident experts. My advice would be get your work credits in.
Yeah, I'm working on that now, but you can only do 1 credit per quarter. So that
because Medicare is so cheap relative to what you would buy on your own that,
absolutely.
Because it's subsidized, it really is very difficult to do better than Medicare.
Yeah. Have you ever heard of that happening where when you apply and now all of a sudden they take 2 credits away from you for some reason, and accountant can't figure it out, nobody can figure it out, and nobody's helping me at Social Security, so I'm just in a tough situation here.
Yeah, I'm not sure why you didn't get it, but or why you're not getting it.
Now I have my old statements that say you have enough credits to qualify, so I just took it for granted that I'm.
Well, maybe you need to go to the Social Security office or Medicare.
I've been talking to them, and people take my name, don't get back to me, and things like that. So,
have you called Medicare?
Yep, I've called them, and I was wondering. They told me to get in touch with Social Security to find out why why my statement says I'm eligible. I have 40 credits, and now, upon applying, it was taken away.
Man, well, we're here for you if you need any help, if you still don't get anywhere. My advice would be keep working, number 1. Number 2, do you have the work credits and they're just not accurately calculating past work credits?
Well, I presume I had 40 because it was telling me I had enough credits to qualify.
Yeah.
And
something.
All my Social Security statements tell me I have my past statements. I saved them, and yet they just shrugged their shoulders. And
Yeah, something
told me,
seems off. So I would definitely call Medicare, call Social Security, go to your local Social Security office, and also you can send
talking
me
to
your,
them, but maybe I should go there. Maybe that'll be. I'll get better results that way. Well,
Yeah, that might
thank
help
you very
you.
much, Josh.
Wonderful. So we're talking next about 3 Social Security strategies you need to do. And this is my 3 tips. Number 1, go to the SSA.gov website. Verify your earnings are accurate. Something happened with this gentleman's earnings where there's a big problem. And third, do a Social Security maximizer tool. Do a Medicare maximizer tool. Call us at 888-988-JOSH for the free book. 888-988-5674, and we'll give you the free Social Security maximization tool at no charge if you schedule and keep your no obligation review. Maury Beckman, writing in the Motley Fool, states that many seniors today rely heavily on Social Security to pay bills once their careers come to an end. Unless you enter retirement with a huge amount of savings, you may do the same. That's why it's important to get as much money out of Social Security as you can. And these strategies could be your ticket to a higher payday. Number 1, boost your income. Your Social Security benefits are calculated based on your personal wage history, specifically the wages you earn during your 35 most profitable years in the labor force. As such, the more money you make, the higher benefits you stand to collect. When you take on a side gig, things like a ride-hailing service or Uber, you're supposed to pay taxes on that income. And while that may be a bummer, the good news is your side income will count for Social Security purposes, which could lead to a higher benefit down the line. Money off the table, or whatever it's called, under the table, will hurt you when it comes time to get Social Security. So that's why you should be legitimate, file your taxes. Tip number 2, we spell this out in my book, The Retirement Reality Check, which you could go over to retirementrealitycheck.com right now. Delay your filing for as long as possible. Every year you delay, you get an 8% credit. However, you're allowed to delay beyond your full retirement age, which for many of you is 67. And if you do, you'll be rewarded in the form of a higher benefit. In fact, if your full retirement age is 67, holding off till 70 will boost your future lifetime income by 24%. And that boost will remain inflation adjusted for the rest of your life. Tip number 3, sync up with your spouse. Spouses who are entitled to a Social Security benefit have an advantage over single claimants, and it's the ability to coordinate their filings. One strategy you might employ if you're in this boat is having the lower earner of the 2 of you file for benefits at full retirement age. That way, as a couple, you get some money coming in, and the higher earner delays until 70. What you can do is have the higher earner delay until 70, which, to be clear, is when delayed retirement credits stop accruing. So don't delay beyond your 70th birthday. That way, that higher benefit gets a generous boost that leaves both of you with more money. And when one of you passes, you get the higher of the 2. Where are you in your retirement plan? Where are you in your retirement timeline? Is retirement a few years away, a decade away, or is it fast approaching? There's no one-size solution that fits all. Regardless of your age, you're going to need a sound retirement plan. That's why we have a 45-minute Income for Life blueprint, where we will literally go over at no charge to you every year of your life from 65 to 95, from 58 to 68, to 58 to 98. And you'll be able to see what your sources of income are. Think of retirement as like a 3-legged stool. You have your Social Security income, your pension income, and your savings income. A lot of you don't have a pension anymore, so it's really a 2-legged stool. But we have to show you how to generate a retirement paycheck. Now, small business owners and the self-employed might consider a cash balance pension plan. The 2006 Pension Protection Act allows small business owners in their 40s to put in approximately $100K a year. And you get a tax write-off. Owners in their 50s can put up to $200,000 a year. And those in their 60s and 70s can even put up to $300 a year. The self-employed might also benefit from a Roth 401k through their business, which enables you to sock away $19,000 a year until age 50. And after 50 or over, you can sock away like $26,000, $27,000 right now. A Roth is paid for with after-tax dollars, and the money grows tax-free, as there is no tax on withdrawals. In retirement, it's often necessary to have access to cash for a variety of reasons. The washer machine can break. The sailboat needs a new coat of paint. Or maybe you have a medical expense that's not covered. One way to ensure you have access to cash is through a life insurance policy. You pay premiums for so many years if you do a 10-pay policy, but after that you can take out as much income as the policy allows. If you've been planning for your retirement, or perhaps you haven't and would like a second opinion on where you stand, call us at 888-988-JOSH. The exodus that has occurred all throughout COVID that drove families from American cities to the suburbs and exurbs sent housing prices soaring because the burbs have a lower cost of living and real estate prices are often less pricey outside of busy metropolitan areas. Many families were willing to pay more than asking just so they didn't get stuck in the city during the COVID-19 blues. It appears that a number of indicators are pointing to a drop in demand for housing prices. And we'll talk about that. So give us a call, 888-988-JOSH. So the number of total sales is falling off of a cliff. Number one. Number two, sales in progress are weakening. This actually would give some credence to the Lacey Hunt theory that we are indeed in a transitory move for inflation. Buyers are growing more pessimistic. Attitudes towards home buying have soured. Builders are stepping back. Housing starts and permits have fallen from their 8-year highs. And building costs are reversing. They're getting lower. This is from the Business Insider. Sources are Fannie Mae, UBS, Census Bureau data, UBS Evidence Lab, Bloomberg, UBS Research. So a lot of interesting data. What does this mean? Buyers are spending more in homes, but the decline in spending implies fewer sales are taking place. We all know what happened when the last housing slowdown occurred. The 07 to 09 crash started with a decline in housing. So what do you think? Do you think the housing boom has turned into a slump? Maybe. Give us a call, 800-321-0710. I want to get your opinion on this. You can call me right now live, 800-321-0710, or you can go to our YouTube at youtube.com. Just search for Josh Jelinski, the financial quarterback. Hit the subscribe button. And I want to hear your opinion. You can also, in the chat box, give us a question. So how have real estate prices influenced your willingness to sell a home or to hold off from buying one? So next up, inflationary effects on diapers. Diaper inflation is wrecking already strained family budgets. I know because we have 2.5 kids in diapers. So it's quite the cost. And now, people want to have organic diapers because the old diapers weren't good enough. So That's another form of price inflation on diapers. Now they're making us buy stupid stuff. Now, rising home prices and skyrocketing gas prices aren't the only things taxing and straining American families. It appears that both inflationary pressures and a market duopoly enjoyed by the nation's top diaper producers. There are two companies that pretty much have a duopoly, Kimberly-Clark and Procter & Gamble, on diapers. And they're driving the cost of diapers up, forcing families to make tough budgeting decisions that will certainly impact the greater economy. Bloomberg reports that families were already struggling, and consumer prices are up 5% in May year over year, but discretionary purchases like cars can be delayed. Diapers can't. You don't want baby boom boom all over your house because you don't have diapers. The average unit price of diapers was up 14%. Packages that cost about $25 last year now cost $40 for a box of diapers. $40. Top of that, diapers are taxed in 36 states. A diaper duopoly makes the impact almost inescapable. Bring up the antitrust lawsuits against the diaper monopoly. Huggies, Loves, Pampers, Pull-Up, all owned by the same people. The only third entrant is Jessica Alba's Honest Company. Look that up. Is that owned by one of these big companies? So maybe there'd be a triopoly. So two companies account for 70% of the U.S. diaper market, and they are protecting their margins as costs for raw material source. No, not begrudging them business success, but it's just crazy. So what do? And then people want to know, did we name the baby yet? Yes, we named the baby. Baby Jedediah. Jedediah means beloved of God, and we call him the nickname Jedi because my wife likes to surf. So we have all these little Jedi shirts. And Jedi is still in the hospital, so pray that he comes home quickly. So, folks, we're going to take a short break, and when we return, we'll be back with your calls at 800-321-0710. So, folks, call us during the break, 800-321-0710, and call us at 888-988-JOSH for the Income for Life Blueprint at no charge. We'll talk more about diaper inflation when we return. This is Josh Jelinski, the financial quarterback. Don't touch that dial. Okay, Dixon, an employee at the nonprofit Community Action Agency of Greater Kansas City, has been going to the Happy Bottoms Diaper Bank to supplement his purchases since the twins were born in 2018. Once a month, he receives 30 training pants per child. Each is meant to last 2 to 3 hours. In desperate straits, Dixon's considered stretching his stash by keeping a diaper on longer. Which parent hasn't done that? I never would have thought I'd think about it that way, he says, in tragedy. So, 1 in 3 U.S. families already couldn't afford enough diapers, a figure that has grown significantly. I've heard there's something called infant potty training, that people potty train their infants. No lie. So maybe, I read a book one time. It's very difficult when you have 7 kids to do that. 1 in 3 U.S. families already couldn't afford enough diapers, a figure that has grown significantly during the pandemic, said Jennifer Randles, an associate sociology professor. Anything that discourages poor hygiene puts children at risk. Wearing soiled diapers can lead to skin irritation or urinary tract infection. The pressure on diaper banks shows the need. Since lockdowns began last year, distributions have increased 68%. The problem is bound to get worse in the 26 states whose governors are ending pandemic relief. Organizers might not be able to provide more than the usual per-child allotment of 50 diapers if they're too expensive. Well, I'll take some of those diapers for free. Diapers have come a long way from a simple cloth swaddling held together with safety pins. Modern disposables use a so-called core and chassis that involve layers of several sorts of paper products to encourage absorbency, quilted liners, and elastic to hold to hold the whole thing tight around chubby thighs. P&G told investors during its latest earnings report to expect price increases by September, and they could be in the mid to high single digits. Nearly all of Kimberly-Clark's increases took effect in June. That means that each of Brendan Noy's diaper runs have been costlier than the last. The 28-year-old father of three from Pensacola, Florida, has watched prices of P&G's Pampers go from about $24.99 to $40. Just doesn't make sense that I have to spend so much for less. So the diaper pandemic is a real problem, and our son's name means beloved. So we love him. He's a great kid.
The preceding program was sponsored by the Jelensky Advisory Group.
Any awards, rankings, or recognition by unaffiliated third parties or publications, including 5-Star Wealth Manager, Advisory of the Year finalist by Senior Market Advisor, and Top of the $1 Million Roundtable, are in no way indicative of the advisor's future performance or any individual client's investment success. No award, ranking, or recognition should be construed as a current or past endorsement of Josh Jelensky or Wealth Quarterback LLC. Information regarding specific awards, rankings, or recognitions is available on the Wealth Quarterback website at www.jelensky.org. All investment strategies have the potential for profit or loss. Investment strategies such as asset allocation, diversification, or rebalancing do not assure or guarantee better performance and cannot eliminate the risk of investment losses. There are no guarantees that a portfolio employing these or any other strategy will outperform a portfolio that does not engage in such strategies. This broadcast should not be construed by any client or prospective client as a solicitation to effect or attempt to effect transactions in securities or the rendering of personalized investment advice. Due to various factors, including changing market conditions, the information discussed in this broadcast may no longer be reflective of current positions or recommendations. While information presented is believed to be factual and up to date, Josh Jelensky and Wealth Quarterback do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. The tax and estate planning information discussed is general in nature, is provided for informational purposes only, and should not be construed as legal or tax advice. Listeners should consult an attorney or tax professional regarding their specific legal or tax situation.
Advisory services offered through Wealth Quarterback LLC.